Support and resistance study. Gold. It's a daily time frame that spans 15 months. This is going to give you a good insight of how we applicate these levels, and there's more to this chart than meets the eye. So let's begin. So from A, we have huge supply coming down. As we break these lows here, okay, I would draw this resistance. This reminds me, from a previous course, would you draw resistance from this high as it contains price? Because it contains this part, and the answer is no. Why? Well, it does contain price. However, the violation, this part of the bar, is too much. Okay, if you take into consideration the average true range of the bar, this whole move up here is 4x, 3-4 times the size of these bars moving up. Okay, the size of the local bars, these bars coming up, because they're in the same area as this bar here. So these bars are in the same area as this bar, we call them local bars. For those who are unfamiliar with AVT, average true range is the average range, as in the high to the low, okay, high, low, of the last few bars. Okay, so out of these bars, the average true range, you could say, is about that. So as you can see, the violation alone is 2 or 3x the size of average true range. Like when we say to contain price, we want we want to pop its head above reverse to close weak. Okay, here it's a subtle. Here this is a complete violation. Anyhow, so the market continues south, we carry on coming down. We find support at the lows. So as we rally up from here, as we break here, we just draw a line from the lows, okay, and that we would consider support. Now, as you can see, this support line doesn't come into use, but at this point we don't know. We don't know it's not going to come back down, so it'd still be drawn. And I would keep this in, okay. I'll keep this level in because this is our trading range. Our trading range now is A. So from A, we push up to B. What do we notice? What do we notice at B? We have 1, 2, 3, 4 touches. So as this comes down, probably breaks this little low here, I would draw resistance from the highs because it contains price. Okay. Now we come down, we find support. As we start to rally up, we don't need to get to the resistance here. As we start to rally, I can see this bar here. I would draw this support level in. Again, it doesn't come into play, but we don't know that. Now, isn't this fascinating? We have this little bit of resistance. Yeah. We get a close off the highs, but then we break through. Okay, so we drive through B resistance to C here. Then as we react, what should happen? Resistance should turn into support. And this ends here with a hidden spring, and that is a trade. But, it dips under the price action to reverse and close firmly at highs. But the point being is this resistance, as we drove through, we came back down and it turned into support. This is where we have a trade location. From the spring here, we push up through C to D. Now, as we react from D and drive back through C, so as we come under C, then I would draw resistance from the highs of D. Now, you know, it's possible we could come down and spring here. So you'd want to see, because this should be support after all, this level. So C resistance should turn support when we get to D. So as it reacts, you know, just wait for a close. Just wait for a weak close under. So as we break here, then I would draw D resistance. And as we react from D, we find that support comes in a bit later than we expected. So support comes in a bit lower than expected at D. We'd expect, you know, B to hold or C to hold, but that's okay. But as we move, as we push up from D, we start pumping here, okay, we would prune C as it's no longer valid. Okay, don't forget, remember, it's our part of the skill, or our job is to recognize levels, you know, that are obsolete. You know, we want to watch the levels, we want to watch the important levels that other market participants are watching. Now, and the key level here is this local level of support. We have 1 touch, 2 touch, 3 touches, and this 3rd touch dips under to reverse and close firm, which is what we call a spring. So this contains price. This would be a local level of support, and we are in a trading range D. Okay, within a major trading range A, or also AD. Well, technically this here is an upthrust. You know, would we take the trade? Well, considering the we must consider the structure. It is a valid trade, yet does not have a high odds of success. Springs like this should be traded in an uptrend, and we've already established that we're making higher lows here and here and higher highs. Okay, springs are traded in an uptrend, or they're most favourable in an uptrend because they are bullish in nature, and upthrusts, as in here, are most favourable in downtrend conditions as they are bearish in nature. Okay, and we want to trade with the trend as it's most favourable. You know, counter trend trading in an intraday environment is fine, although with daily time frames, or, you know, for swing trading purposes, I only trade with the direction of the trend. I mean, of course we do counter trend trade, but we must be aware of the trade's limitations. Okay, so just bear that in mind. So from the spring, we push up through D resistance to E. We react, come down, we try to hold. You can see this price action here. We can't, we break down and we fall. Now, as we break here, is when I draw this level of resistance. So as we drive down through here, we rally back up, as we pass this local level of support, and we've got this good strong buying, this level would be drawn in, and this is our trading range E. Now we try to push up, and D resistance, you know, is doing its job. It kind of holds here, but look, we have a little mini trend channel. Okay, the lows are lifting, as in we're making higher lows. As you can see, the price action, we just, you know, we're knocking our heads above resistance with the lows becoming higher and higher. This is a nuance we will go into, but this is a subtlety telling us, you know, that odds favour resistance breaking here. Okay, just from price action alone, we can tell that a break is imminent, and we do break. However, E resistance holds. We can't touch it. We can't test it. Okay, so this, because we can't touch this structural area. Okay, and the price action isn't, you know, there's no 2-bar top reversal. It's untradeable. Okay, that's fine. So as we react here, the market hints towards a hold on this bar. Come down, we dip over, we close firm. Looks like, you know, we're going to come back up. Market has other ideas. Here, gap down. There is a supply imbalance. Okay, No surprise, why? Because we're gapping down through support. And we continue south. We have a little rally here, and as we break these little lows, I will draw on this little level, little dotted line. I'll draw that in as a local level of resistance, and it doesn't come into play, but it would still be drawn. Okay. Now, as we come back down, we come to a very important area. Why? Well, for all intents and purposes, we have two levels of support. We have this support and this support. Okay, and look where price action goes, right into the middle of the white space between the two. Okay, now this isn't to be confused with the confluence area. This is merely two levels of support close to each other. So we hold here, and the market gives an opportunity to jump on board. Now, let's move this along. Now we can see that this little local level resistance does do its job, as we can see negativity on this bar. But as we trade up and through it, this level, would be pruned. I would still keep the dots in, but it wouldn't be coming over. We would expect, as this is a little level of local resistance, we would expect a little supply. Okay, now we need to apply logic here. What has more strength, these two levels of support or this little local level of resistance? Okay, we would expect this area to break. So why keep it in if you think it's going to break? Because it's very useful. This bar, okay, is an up thrust. We dip, we push out, we push up, come down, reverse to close weak, and it's very useful for intraday trading. If you think on a smaller time frame, don't forget this is a daily bar. This is a daily chart, so that is a daily up thrust. So when we have this bar, if you think in a 3-minute or a 5-minute time frame, we push up above resistance in a few bars. We've defined either it's swamped by selling or no demand. As we come back down, we want to trade on an intraday time frame, and that's about 20 points in gold, which is 200 ticks. It's a very good trade for intraday trading. So this is why these little local levels are very important, especially if you're an intraday trader. Okay, but when we begin to trade through this area, it'll be pruned, deleted once it loses its value. Our main resistance here is D. This is our main resistance. It's valid, it's been tested. Remember from the previous study, validity is very important. A good way to gauge it is not only by the containment of price, but also the way that price breaks through an area. So, for example, look at D here. Okay, look, we come up, see that we break this area with a good widespread bar, gives it validity. Okay, this break here, big widespread bar, gives it validity. See the break here, good widespread bar, gives it validity. We try to hold, and how do we break through? With a widespread down bar. Okay, and even here, it tries to break up with a big strong up bar and then gaps down under. Okay, even weaker. So these, when we can see the market, this is active selling and buying at this level, so we know, so therefore this area is valid, it's tested, it's real. Market participants are watching this level, and it's taking active buying or selling to travel through, to penetrate and go through the area, and that's very important. This little level, it does serve us for an intraday trade, but the main resistance is coming up from here has to be D. Okay, so as we do come up, D resistance holds, and as it should do, but the reaction is very minimal. Okay, now as we break through here, I would draw this level. I would draw this level in. You know, we have 2 touches. I wouldn't expect too much because, you know, this is D is our main level of resistance, but this is kind of like a local level of support. Okay, and it would be drawn in. And of course, it doesn't really come into play. But note the price action again as we come through wide spread. Okay, so as we push up, we come back down, what do we notice? These 2 bars come down, reverse close firm, come down, reverse close firm. So what does that tell us? Well, this means lower prices are being rejected as we dip down. No further selling, reverse close firm. Dip down. No further selling, reverse close firm. And we know this is valid. So this now was valid resistance. Okay, so now should be support. And what does this tell you for these 2 bars? That support is holding. Okay, you know, again, giving the level validity. The market on these 2 bars is begging to be bought. It's just begging to be bought. It truly is remarkable. When you're experienced, or you know, more importantly, you have belief and understanding what's unfolding in front of you. This is a lovely trading opportunity. Valid tested line, minimal pullback, local level of support where we reversed close firm here. Okay, then we push up with this good price action again. That's active buying. So when we come back down to test, you know, this is our pullback. So these 2 spring-like type bars are, you know, is a pullback, and the holding support. Buy. Okay, this is how trading is done. Read what's coming out in front of you, believing it. It works. It has done for 100 years. Support and resistance is very powerful. So we drive up, and what do we notice? We break good wide spread bars. Gives this level validity. So we continue up. We continue north to A, which is an up thrust. This A up thrust, the high over here, and what a beauty! A clear rejection of the highs. So we push up. You know, come buy me, buy me, buy me. No, no one's buying. Reverse to close weak, practically on its lows. And what happens after this up thrust bar? Gap down here. Absolutely beautiful. You know, there's a supply imbalance at resistance. So very good news if you're short from A. You know, think about this. This is a 1, 2, 3, 4, 5, 6, 7, 8. This is a 10-month up thrust. You know, so as we're coming back down, I would draw this level in. Like, why, you know, I know I speak of dams. Why would I draw this close to? Why would I draw this level when it's very close to it? Well, it does contain price, but this is a new 10-month high for this contract. You know, this is new high nearly after a year, so this level is important. Although this is close together, I would consider this a supply area. You know, support and resistance levels aren't always so reactive. We just need to be aware that there's selling in this little area. So if we come back up, we look for selling. And then wow, look at the move we get from the up thrust. We break 2 levels. If we draw this over, we break 2 levels of support with ease. We slam right down. And now, if we draw this in, now this how can I put it? This break of this support here from deep resistance, it's probably more momentum. Okay, the force of selling has been strong for a while. You know, it takes time to stop a force. You know, you've heard the metaphor of an oil tanker on the ocean takes 20 miles to stop. It's the same. You know, when you have active selling or buying, don't forget this is a daily time frame. Okay, so this is a whole 5-6 weeks of selling. This is a daily trend channel. Just to draw this down, we have a very good trend channel in place. Yeah. Now think of this on a 60-minute time frame. This should help to make what I'm saying. If you're on a 60-minute time frame, you have 6 weeks worth of bars. Okay. So times 24, whatever this is it hundreds of bars. Okay. It's if you're trading on the Globex. So when we're coming down, we have clear momentum on our side, right? And when we get large moves like this, it's unsurprising that we break areas of structure due to the momentum of selling. Okay, does that make sense? Like we're knifing down, we're coming down. It just takes, everyone's getting excited and joining in the move, and it just takes a while for the market to respect levels. So when we get large moves like this, it's unsurprising that we may break a bit of structure due to the momentum. Okay, don't forget, big selling coming down, slamming straight down. So for example, we push up here, we take a break, we push. Okay, we push up, we take a break, and we push. We come here, we push up, we take a break sideways, and then we push, which is different to coming straight down. Okay, when we're holding in places like this, the move has been broken. The buyers and sellers are taking a breather, but A to F, we slam no foot off the gas. So when you see this occur in the market, just be cautious and aware that that momentum may be carrying this a little further than expected. Anyway, right, rant over. So we find support at F. Then as we rally to E, it holds as resistance. It's of no surprise. Why? Because it's been validated by price action. So this level, look, we break up. Okay. We try to hold it here, but look at these two bars here, wide spreads down. This level has been validated. No surprise that it holds. It really is fascinating. I hope you're beginning to try and understand this. This is very powerful chart reading skills. Just using support and resistance and being able to gauge of why areas are holding. These are skills that most traders do not possess. We react back down to F from E, and we hold. Now, this rally is very interesting. We have a little trend channel. We have a little trend channel here, okay? And this is the weakest buying on the chart. This channel. Well, what do I mean by this? Well, look at the previous bounce of buying. Look at that buying. Look at this buying. Look at this move up compared to this move up, to this move up, to this move up. Here, we can draw a line through more or less all this price action. The market is struggling here. The market is finding it very difficult to push up. So the quality of buying is poor. Okay. Now, this is another tool of analysis that we have in our tool in our box. We will cover this in depth in sessions 7 or 8, and it's one of my favourite forms of analysis. It's called comparative and relative analysis, and it's very powerful. It's a very good tool to have in your trading box. So why is this interesting? Well, we have this little trend channel which we've just described as the weakest buying on the chart. Okay, and we're also in an overbought position. So when we have a trend channel and an upside trend channel, and we reach this is a demand line. We're going into this in a minute, and that's the supply line. When we come close to the supply line, it's said to be overbought because we're buying. When we reach supply line, we're overbought. So We're overbought in a trend channel. Now what do we notice here? 1, 2, 3, 4 touches. So as we break, come down, we would draw this level in whilst we're in an overbought position. So think about what's going on here. Okay, we have a strong move down. Okay, probably some of the best selling on the chart apart from A. It is the second best selling on the chart apart from our initial move down from here. And this originates from an up thrust, which is a sign of weakness in itself, followed by a gap, which is a supply which is positive as it's a supply imbalance. Then we come down, we try to, we come back down and rally to E. Now this is a bit of profit taking, it's a relief rally, and resistance holds. So we come back, then we try to rally with the weakest price action on the chart. We become overbought in our channel at a local level at resistance. So as this level breaks here, we could take a trade. There's enough reason to take a trade here. And our first target would be here. Okay, this would be our first target. We don't know, it's not, it holds here and then rallies up at this point. We're just reading what's unfolding in front of us at the time. Okay, and this is telling us we're coming down. All this information, the background conditions are telling us it's coming down. Another way of describing is this selling quality. Okay, selling quality here is positive. This rally, so the buying here, is negative. And then we're looking for reasons to short, and we get a local level of resistance in an overbought within a mini trend channel. Apologies, I am going off on a tangent here, but when I see the price action and I can see the structure and I see it unfold in front of my eyes, I become quite passionate. I want to try and convey what I'm seeing. But the good thing is, once you go through the chart, once you go through the course and you understand all the terminologies and the price action and comparative and relative analysis and the confluences and using structure, when you come back to revisit and study this session again, you'll have another additional level of how can I put it, you'll be able to extract a lot more from this session once you've completed the course. So we come down and we drive up. Now we drive up through E, and as we react, price holds, so support is holding. And what do we notice? Isn't this funny? Now we have the best buying on the chart, period. There is nowhere that has better buying than this on the chart. Not there, not there, not there, not there. There is no, that is the best buying on the chart. Unsurprising that we hold here. Okay, so I mean, just compare the quality of this buying to this. I know it's more comparative and relative analysis. We will go through that. I think it's seventh session. All right, but the market gives ample opportunity to jump on board here. Don't forget, dip down, close firm, dip down, close firm, come down, dip down to reverse and close firm. Okay, support is clearly holding. So this choppy kind of price action here, all this is a failed pullback. There is not enough. Look, think after this good strong push up, we push up, then we try to come back to newly formed support, and we can't even. There's not enough selling force to react. So we hold. When you see positive price action, we can trade. The buyers are stepping in. So as we hold here, we push up. What do we notice? Good wide spread. Closing firm gives this level validity. We come back down. Isn't it amazing? This little level holds. Then we push up to the highs. Now, from this big strong move up and this little weak pullback, we would expect another good strong leg of buying, but this doesn't occur. What does occur is more negativity. You know, we would expect continuation from this ordinarily, but you know, we can only read what the market gives us, and we can tell from this bar and this bar, these two bars are widespread closing firm, you know, but we're unable to break. That's 2 whole active days of trading. And then what happens? Another gap. So we gap down, another supply imbalance up in these highs. So this is strong selling up here. You know, we had an upthrust followed by a gap. And now we have 2 strong days of buying, unable to break above these levels of resistance. Again, followed by a supply imbalance, another gap. Now, so if we're long down here, we have to exit longs when we see these 2 bars failing to break and this supply imbalance. Okay? For whatever reason, there are many resting sell orders, and as the market opens, we gap down and open lower. Okay? This is telling us lower odds favour lower prices. And then we come back down to support and we hold, and we've got E and our local, so we have 2 levels of support. Now this is strong selling, that is strong selling. Yes, we do dip under to reverse and close firm, which indicates a spring, but all this negativity, the upthrust, the gap, the 2 bars that can't break, widespreads followed by a gap, as we come down, 2 widespread down bars. Selling is active, okay, but this is a demand area and it does hold. So you can take a trade intraday, but we must be aware of the trade limitations. You know, odds again favour higher prices, testing either here or back up at the highs. So as we break up, we look at that as a wave, and this is a pullback. But when we analyse all the behaviour, like I said, again, these 2 bars can't break, gap imbalance, as we do react down as evidence of good selling. Okay, so this area is actually very important for this contract because we negate all this buying as well. You know, like I said, we should have continuation if this market's strong, but all signs are indicating this is weak for gold. It'll be interesting to see how this pans out. Good. Now we're heading towards the advanced construction of support and resistance, you know, the nuances. So here, the blue lines is where I would draw the support and resistance levels as it contains price. Okay, the normal use would be from this high, okay, this high, and this low here. Okay, so if we just skip back, so we have the highs of E, D, and the low of D, and I will draw them here, the blue lines, just under. Okay, now this is what I mean down here from the containment of price. So we come down, we've got a good move, and we come down, we close off the lows. We dip under, and we close off the lows. Push up, come down, and we close. Dip down, again we close off the lows. And we push up, and we come down, and we close. Okay? Now, from this bar, this first bar, this is where I would draw support, which is this line D. Okay, I wouldn't draw it from the low, this bar that dips under. Okay, why? It's because it contains price. It contains all this price. This is a daily time frame. That's 5 days worth of trading. It's unable to break. You know, we can't break. We're holding. You know, we can't. It was broke under here once, and it's instantly reversed. We cannot break this level. You know, most people would draw it from the D, and you can draw both. But the main level is the adapted nuance, the blue line. Why? Because it's been validated. It's been validated by 1, 2, 3 touches and a reversal being the spring bar. Okay, it's clearly containing price. Like logically thinking, well, in my mind, this is the level that's important because it's been tested. You know, if say this is where we come down, we have a bar closing there, and we come up, and then we come back down, we get another one. Then I would draw, you know, then I would draw it from the lows, but we don't. Okay, so if we have a couple of bars that close under, close under this level like here, then, you know, one would draw the lows from here. But this is a powerful, subtle nuance, but extremely important. I mean, look what happens when we revisit this area. We spring. It gives us a trading opportunity. Yet if we use this low, okay, we miss out. This happens time and time again in all markets. So let me just switch back. Look at the lows of D. Okay, go back. We don't touch. Now we spring. Okay, this is the containment of price with 3 touches and reversal action. It's been tested, validated. Okay, at E we have 2 touches. Okay, I wouldn't draw the blue line in from here, but when we touch over here of another 2 touches and we start coming down, now I draw this level in. Okay, it's important. It's containing price. 4 touches, 4 days worth of trading. And look what happens. We up thrust here later on. We up thrust here, and we spring here. This level is important. Okay, and if we let me just jump back here, doesn't really provide the opportunities, not clear cut like like it is from the blue level. So the point being, just because this is a swing high, you know, of course you can draw the line, but don't take it blindly. If you see 3 or 4 touches, draw the level in. To me, this is more important than the swing high, as it's been tested, it's been validated. Okay, so most traders would draw it from the high. And we can see 4 touches. Price containment. Can't close above it. We can't even really pop ahead above it. Okay, this is advanced reading and application from the adjustment being the blue line. You know, this is daily time frame. That's 4 whole days. 4 whole days. Price action cannot close over this level. This is the level. You know, this is the level that's important. It's of no surprise that this level provides the trading opportunities. You know, later on. I mean, you can draw in this level. There's nothing wrong with having both on your chart. But when you see 4 touches, you know, and we come down, it's like Wyckoff from the dams. You know, they're too close to each other. I personally would prove the highs of E. Okay, this why? Because it's the blue level that works. You know, up thrust, 2 bar top reversal, up thrust, spring, and look here. We drive through, and what does this level do here? It holds. Okay, it holds price. Very important. And D, the adjustment would be made via the 3rd touch. So we have this first touch, then we get a little violation, then we come back for the 2nd touch. That's a violation. That doesn't count as a touch. That's first touch, 2nd touch, that's the 3rd touch. So as this bar closes here, I would draw this level in. Okay, and what do we notice later on? It holds here. It holds here. Then as we break through, holds. Okay, and then later on we get a lot. Well, it tries to hold here, and later on we get an opportunity from 2 little springs. Okay, this is why it's very important to draw the correct lines, as it provides trading opportunities. And the way to draw the correct lines is, if we get the opportunity, we need to look for multiple touches. 2, 3, 4 touches. 3 or 4 touches, okay? Or like down here, it's slightly different. We have multiple touches that contains price in a tight area. You know, we talk about the containment of price, and what I mean by tight area, I mean it's all together. You know, there's no, we're not reacting down then coming back. All this happens in preceding bars. Excellent. This was the main focus for this study, is to show how to applicate support and resistance. Okay, from the highs, and when we break. You know, when we break, then we draw in the highs, you know, and then support turns into resistance. When does support turn into resistance? When we can see valid breaks, you know, good price action. It gives the level validity, okay? But the nuance, looking for the multiple touches, this is where we gain an edge, as it may provide opportunities later on that are clear cut. Okay, don't just draw the swing highs and lows blindly. Excellent. This concludes our support and resistance study. Feel free to ask any questions. Give you a couple of seconds. Let's look through. Would you draw for support from the last swing low? Low from here? You can do. Good question. I can see your logic here. You can do, but what do you notice? Remember Wyckoff and Downs. This is very close to a supported, a validated, tested support level. Okay. I mean, this is where discretion comes into play, and you need to know the markets. You know, every instrument, every market has a different personality, and you need to know the way it moves. Okay, but for this, I wouldn't include it, because of this is the main support. Okay, and because we're up here, we're coming down, I would expect the market to test this level. Okay, good question. Can you go over average true range? Okay, average true range. Literally, you can have the average true range of 5 bars, 10 bars, 20 bars, 50 bars, or 100 bars. There, you know, it's up to you. All that means is you're looking for, say, let's just draw some bars in. You know, our average true range with the spread of the bars. So this is these are our number of bars: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So out of the last, so we're looking for the average true range of the last 12 bars. Okay, and we'd say that probably that would be our average. Okay, so how does this help us really? Well, if say on day 13 we have a bar like that, we know that is 3 times the size of the average true range. And if this closes firm, we'd probably say that demand is in the market. The buyers are active. Okay, good question. Why does support and resistance work? Oh, yeah. This is a very popular, complex question. And there's many great books on the subject. You know, why does structure work? Why does support and resistance work? Okay, first of all, a lot of people think it's a self-fulfilling prophecy. What do I mean by this? Well, if everyone's looking, say this is support, come up, we come back down, it holds, come up, then as we come back down, most people will be thinking this is going to hold, so they buy. So it becomes a self-fulfilling prophecy. Okay, that's one way of looking at it. Now, if we go into the dynamics of the market and how, for example, not support and resistance, but how it works. So say we come up here in an uptrend, boom, we come up and we upthrust. So there is selling here. Okay, but this part here, to get up there, people must have bought. Okay, so we have a lot of trapped traders. Okay, so all this area here that went above our resistance are buyers, and they're trapped because it's closed under. Now, if we continue down, you will be astonished of how many people will still be holding onto their positions. Don't forget, they could, and it's dependent on time frame. You could have a monthly time frame, a weekly time frame. You just say this is a daily time frame. We came up, we slammed down, closed, back under. All these traders are trapped, and they come back down, and support holds. So you might have some more buyers down here. So we spring down, we've got some buyers. Now, bear in mind that people bought down here. Clever traders bought down here because they recognize it's a spring. Now, as we come back up, okay, now what happens here is all these people who got trapped here are now happy to get out at break even. Okay, they liquidate their position. So this adds selling pressure. Okay, think about that. So all these trap traders over here, they came down, they endured all this pain. Some buying emerged to come back up. As soon as we get to around the area, they might break out, even for a small loss. And psychologically, they will feel relieved, But this adds selling pressure to this level of resistance. Also, bear in mind, we may have support and resistance traders that have recognized selling here. They may not have got in because this, okay? Now here, as we come back, they may know that there'll be a lot of trap traders from here, and they're expecting some form of pullback. We don't know how large or the extent, but they're expecting a pullback. So when they revisit this area, they sell. Again, this increases selling pressure at resistance. So that's 2 lots of selling. Also, the clever people who bought down here, okay, they recognize that this is resistance, and they may want to A, depending on their time frame, they may want to A, liquidate all positions, or B, take partial profits. Okay, which again adds to the selling pressure. So now we have 3 lots of selling occurring at this resistance level. Okay, I hope that makes sense. Yeah, good. So we do have self-fulfilling prophecy definitely has an element to it. When we have violations, and that we'll definitely see selling like I've just described. But what's of value is just to accept that support and resistance works. Okay, just believe in it, and the best way I can get you to believe is by practice. Just pick your time frames, pick your charts, pick your 5-minute, 15-minute, hourly, weekly, monthly, whatever charts you use, okay, and draw structure. Study, have a little look around the areas, see, just applicate it, use it, practice. The more you practice, the more you see it. The more you see it, the more belief you have in it. The more belief you have, yeah, you will gain confidence, and through the confidence, you'll be able to pull the trigger. And these nuances, they may seem far whack to some people, you know, a stretch of the imagination, but far from it. I mean, I've been trading for years. Go through the S&P Chronicles. Okay, it happens hundreds of times, time and time again. It's a very good question. It's a very complex question. There are books on the matter. Importantly, just accept that it works. Okay, very good question. This concludes our support and resistance study for gold. In fact, it completes our support and resistance studies. On to the next subsection. Thank you.